The bears on the European energy market seemed a little bit exhausted towards the end of last week. What we might be seeing at the start of this week is a little bit more of a stronger push higher before the downtrend gets another chance to continue. Hi, my name is Marcello Colax. I'm the managing director here at Clever Markets, and I'm going to walk you through the charts for the week ahead. Everything that you're seeing here today, of course, is not trading advice and just my humble opinions. It is not an invitation to trading or any sort of market predictions, of course. So let's see what we are confronted with this morning. So our clients are receiving this update at the start of the week. We see that most of the market on the TTF and the NBP is rather neutral all across the daily and the hourly chart, because the bears are exhausted, the bulls are not yet fully in charge. It does look a little bit different for the EUAs and for the German power markets, where the bulls have been able to push through, and there's still a little bit of room left to go before the bulls are exhausted. Today we also want to talk about Brent, that has seen a dramatic drop at the end of last week, which could have very soon an impact on the daily chart as well, which might turn bearish fairly soon. So this is the TTF sentiment poll that is released this morning. So what I find fascinating is that over the past 3 or 4 weeks we had strong bullish dominance, but this has now given way to bearish dominance very, very slowly. So I remember like 3 or 4 weeks ago we still had the bulls at more than 50% being convinced, which was also when the market started to move higher. But over the next 2-3 weeks we did see that, for example, now it is the bearish sentiment that is in charge. So this is showing me that the corrective up move that we have active on the TTF right now is really just an up leg, a corrective up leg in an underlying downtrend before the downtrend continues. So here let's have a look what we are actually faced with at the start of this week. This is the TTF front month and front season, the NBP front month and front season, the EUAs, German power, Henry Hub and Brent. And you can see just a couple of weeks ago we did push outside of these sideways ranges, at least for the TTF front month and the NBP front month. The season's still firmly neutral, I want to say. The EUAs have been pushing higher dramatically. We are working with clear targets that we'll talk about in just a moment. And the German power markets recouped all of their losses that they made just a couple of weeks earlier. Join me at this year's last Technical Analysis Academy starting on the 6th of October 2025. The first round was already sold out before I advertised it, so I decided to open up a second cohort. Over the course of 5 weeks, I'll share with you the playbooks and the strategies that have worked for hundreds of energy traders already. We'll give you the blueprint to make technical analysis work for you, because we can't change the markets, but we can still make the best possible decisions at every market move. There's a link in the comments to learn more. Send me a DM if you have any more questions. And now let's get back to it. Okay, so now let's go into the details. I want to go directly onto the daily chart, and you might be wondering, why are we not bearish if we are in a descending channel on the daily chart for the TTF? Well, true, broadly speaking, as long as we are within this descending channel, we could argue that we are bearish, but our analysts have decided that this is not really reflective of market action, because we want to see a flow of lower lows and lower highs that would define or instill confidence in the bears. But you can see we did make our first higher trough, and we are not yet making higher highs, we are not making lower highs. So what's going on? Probably sideways. So this probably on the hourly chart could turn out to be a triangle. The bears are not convinced. They would only be convinced below 30.3, and the bulls would only be in charge as soon as we start pushing above this descending channel resistance near 32.9 this morning. So you can see we are also expecting that the market could push a little bit higher, but ultimately we still think that the bears are more likely to continue. Now on the daily chart, keep an eye on this, right? We did have a bearish engulfing. This is usually a bearish candle pattern that is invalidated above 32.75, and we will get a validation of this bearish pattern below 31.83. So if we push below this, then the bears have a good chance to continue at least towards 30.3, and only below that level would the bears be fully in charge. Okay, now let's have a look at the indicators, because they haven't really done much, and this is also contributing to our neutral stance on the daily chart. You look at this, right? I'm looking at the MACD, the moving average, convergence, divergence. It's just our momentum tool of choice that we are looking at. And you can see we haven't made any progress into either direction. We have been moving in this range for a long time while the price is moving lower. This is showing me that the bears are not really operating with a lot of conviction right now. So then also we see that the slow stochastic is making lower lows and lower highs, kinda. Right now we are floating directly in the middle, so we are not getting really conviction from either side. Volume is just meh, there's nothing really strong, nothing really weak, it's just slap bang in the middle. So right now we don't really see any convictions from anywhere, and that is especially also reflected in the DMI, because the DMI indicator consists of 3 lines. One of them is this white line here called the ADX, the average directional index, and if we are below 20, you can see right now we are hovering at 14.8. If we are below 20, that means that the market is not trending. Interesting. So here for momentum traders, I don't think there's anything good to be had right now. Now let's go to the TTF hourly chart. Here we are working with this ascending broadening wedge. Honestly, if you are so inclined, you could even turn this into an ascending triangle. I like this as well. So here we would get a bullish signal above 32.735, because ascending triangles are usually resolved to the upside eventually. But you can see right now we are still more inclined that after a weak open, maybe a little bit, that we could continue lower overall. So this is our assessment. So of course, if we get a bounce here and scenario 2 is playing out, then we would simply start to swing sideways within this range. And you can see what impact this would have on the daily chart, right? So right now the expectation is maybe like just a tiny bit higher before we continue lower, but ultimately if scenario 1 plays out on the hourly chart, then probably we would get a bearish confirmation of this bearish engulfing pattern here below 31.83, and then the bears would simply continue on the daily chart as well. So this is just a very simple concept that we are working with here at Clever Markets, or just in general TA. So the lower level time frames, they move first, and they can give us early hints of what's going to happen on the higher level chart, so in this case hourly, daily. So now what are the chances of this thing like bouncing or continuing higher, continuing lower? What's going on here? So let's have a look. So we ended last week with a bullish Harami candle. So you can see this is the exact opposite of a bearish engulfing pattern that we saw previously. Alright, so this candle pattern usually resolves to the upside. We don't really think that's going to happen right now. We might move a little bit lower at the start of the week before we, but a little bit, I really just mean a tiny bit, before we have to make a decision at this supporting trend line here. So the tools are not really showing us all that much. We did see very high volume, but this is simply because it was the last hour of the last day of the week, so there's supposed to be some high volume, so I'm not really taking it all that seriously. But looking at the MACD, we could say that we did get a bearish crossover, so it's looking rather bearish overall. The stochastic is hinging, so that simply means we get this little edge higher, but it's not giving us any signals at all. And also overall the ADX of the DMI tool is still at 18, not quite trending. So right now we are none the wiser and really just need to see what's happening at the start of the week. Please do work with this ascending triangle. This could be super useful for you to get either a bullish confirmation or a bearish confirmation, which will then have an impact on what might happen on the daily chart if we'll break above the descending channel or if we move lower. But everyone, have a good start into the week. See you around, and bye bye.